Welcome. In this video, will Zbcn coin continue to try new highs? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When carefully examining the chart, it is clear that a highly notable and technically significant ascending trend structure has formed. This ascending trend line has historically acted as a critical zone where the price has repeatedly found support, reversed direction to the upside, and attracted strong buying interest. In technical analysis, trend lines are powerful tools for identifying market direction. Currently, the price action is positioned right on this trend line, providing important clues. If a reaction move begins from this point, it could signal not just a temporary bounce, but the potential start of a larger upward wave. Such ascending trend lines are strong indications that the bulls still hold control in the market. Each time the price approaches this line and buyers step in, it confirms that the market views this area as a solid support and that safe long positions are being initiated here. The price's precise touch on this ascending trend line increases the likelihood of a strong technical support reaction. Therefore, a renewed upward momentum from the current level is a highly possible and promising scenario. Looking at past movements, there are several examples where the price touched this trend line and continued its upward trajectory with strong reactions. This recurring pattern is known in technical analysis as a trend-based reaction move and provides investors with relatively reliable signals. If the price approaches the trend line with slightly higher lows each time, it indicates that the market is still operating within a strong upward structure. This setup is encouraging not just for short-term trades, but also for medium to long-term positions. Additionally, the consistent effectiveness of this trend line suggests a high level of technical awareness among market participants. Technical traders pay close attention to such strong and repeating trend structures and tend to buy when the price nears these lines. This increases the buying volume around the trend line and supports a potential upward bounce. If a reaction occurs from the current level, it would not only confirm the strength of the trend line, but also indicate the potential start of a renewed buying wave in the market. Trend lines also carry significant psychological weight. Many investors view these lines not just as technical tools, but also as psychological safety zones. When the price approaches this area, panic selling is often replaced by careful and strategic buying. This reduces selling pressure and prepares the ground for a potential bullish reversal. If the price reacts strongly from this level as it has in the past, it would reinforce the bullish outlook both technically and psychologically. Furthermore, these kinds of ascending trend lines are often part of what's referred to as a healthy uptrend. This means that while the price continues to make new highs, it occasionally pulls back to touch the trend line before rising again, indicating a balanced and sustainable upward movement. This healthy behavior allows the price to appreciate steadily over time. Especially in highly volatile markets, such stable trend structures offer investors confidence and serve as key reference points for decision-making. But we cannot rely solely on trend lines for analysis. Let's also take a look at other metrics. Stay tuned. When closely examining the chart, it becomes evident that a specific zone, marked by this red line, where the price previously reacted significantly, has now become a highly critical resistance level from a technical analysis perspective. This level holds great importance because it is a point where previous upward attempts stalled, selling pressure intensified, and market psychology was strongly tested. Now, the price is once again approaching this level and beginning to challenge it. If this resistance level is broken strongly to the upside, it could signal not just a short-term success, but the beginning of a much larger rally that might lead the price to reach new all-time highs. Resistance levels are often seen as turning points in the eyes of investors and traders. These areas have historically resisted upward price moves and tested the strength of buyers. However, what's particularly important is that the price is revisiting this level. This is typically referred to as a resistance test, and if supported by sufficient buying power, the resistance can be broken, paving the way for the price to move into uncharted territory. Therefore, this area marked by the red line is not just a horizontal level, but also a threshold that could determine the price's direction. If this resistance level is broken to the upside, it would result in what is technically referred to as a breakout. Following such a breakout, market participants typically gain confidence, and buying pressure increases rapidly. A new 88th all-time high means that the price has reached levels never seen before, indicating a supply-demand balance that now favors the bulls. Such breakouts are often supported by high volume and may trigger a FOMO, fear of missing out effect, causing the price to experience much larger surges. So once this red line is broken to the upside, it won't just mark a technical event, but also the beginning of a new bullish wave from a psychological standpoint. The importance of this resistance level is not limited to past price behavior. It is also likely being monitored by many algorithmic trading systems, bots, and professional traders. Therefore, the breakout moment usually occurs with high volume. These types of breakouts make it easier for the price to gain new momentum and continue its uptrend with strength. Especially ATH breakouts can even prompt long-term investors to re-enter positions, since the price is moving into uncharted territory and previous technical boundaries no longer apply, allowing for even greater upward potential. Additionally, the commonly referenced technical principle of old resistance becomes new support comes into play here. Once the resistance level marked by the red line is broken to the upside, if the price later returns to this level, it often acts as a support. This helps provide a solid foundation for future price increases. Such structural transitions on the chart signal technical strength and boost investor confidence. From this point forward, if the price breaks through this critical resistance zone and manages to hold above it, it typically triggers new buy signals. Technical traders tend to increase their positions after such breakouts because it confirms the uptrend. Moreover, in such resistance breakouts, Fibonacci extension levels, trend-following indicators, and moving averages often begin to produce positive signals as well. The alignment of all these technical indicators further strengthens the upward movement. When carefully observing the chart, the vortex indicator appears to be on the verge of entering a significant transition phase. In the current setup, the red line, representing the negative vortex direction, is positioned above the blue line. Technically, this suggests that sellers are currently dominant in the short term. However, this scenario may be close to reversing soon. The blue line, representing the positive vortex value, is gradually starting to curve upward and approaching the red line, which could be a very positive and noteworthy signal, indicating that bullish momentum is beginning to gain strength in the market. The vortex indicator is a highly effective and reliable tool for identifying the direction and strength of a trend. The blue line reflects buyer dominance, while the red line represents seller strength. In technical analysis, the intersection or convergence of these two lines is often used to detect moments when a trend may shift or strengthen. Therefore, if the blue line has started to turn upward and is moving closer to the red line, it suggests that buyers may be regaining control and that an upward move might be about to resume. This type of structural transition observed in the vortex indicator, especially during periods when the price is attempting to rebound from key support areas, offers strong signs that the underlying dynamics of an upward movement are strengthening. The upward momentum of the blue line indicates an increase in buy-side orders, a growing willingness among market participants to take on risk, and a generally improving sense of market confidence. This activity is usually supported by volume and helps the price to launch strong upward moves. The vortex is important for trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.